Surprisingly, we have a price action concept indicator, and I was like, oh my god, I really have to know more about this indicator. And so guys, in this video I just want to focus on that price action concept indicator, because most people and many traders don't really know what it entails when it comes to price action. And I was so much surprised because some features that are being seen on smart money concept, they are in price action. What does that tell you? So guys, I just want us to see with our naked eyes what price action concept indicates. So the indicator is actually on tradingview.com, and so to add it, you're just going to Tradingview. Once you go to Tradingview and the indicators tab, you're just going to type price action concept by HunterAlgos. I'm just going to type the name right here. So guys, once you click on it, it will appear like this right on your chart. Imagine here we have bearish and bullish break of structure and bearish and bullish change of character, as well as we have order block zones, and as well we have liquidity, and as well we have the swing points in our chart. And swing points are very effective. And so guys, let's look at this indicator. Then in my next video, which will actually be posted after this, I'm just going to tell you what I've really noted regarding the price action concept indicator and the smart money concept indicator. So guys, I don't want to prolong this video. I just want us to go directly and understand all these features you can see on my chart over here. So guys, let's do this. So guys, the features of this indicator, number one, it includes the internal market structure, which is change of character. As well, we have the swing market structure points. Then we have the volumetric order blocks I will show. Then liquidity grabs. As well, we have the higher time frames, highs and low. So guys, I just want to focus on this step by step, and so we are going to start with the market structure example. So guys, you're supposed to know in this case over here, when you find a market like this, I know most of you are familiar with the break of structure. You're supposed to know when the price breaks the bullish break of structure multiple times, it is a sign of a strong uptrend. This means the market is consistently passing in recent highs, indicating that buyers are taking charge. This simply tells you bullish break of structure, when they are broken above, they show as a continuation to the upside. So that's why you can see there is a strong bullish trend breaking multiple break of structure. So this shows you a really push to the upside. And so guys, on the other side, when the market repeatedly breaks the bearish break of structure, it points to a solid downtrend. And in simpler terms, the market keeps falling below in recent lows, showing sellers are in control. And so guys, when you see bearish break of structure broken below, it shows you a strong bearish trend because it is breaking multiple bearish break of structure. That's what you're supposed to know. And so guys, let's talk about change of character. The change of character, this occurs when the market shifts its behavior by breaking the opposite high or low. So for instance, if a bullish break of structure breaks but the price then drops to a recent low, it is a sign that sellers are gaining control, leading to a change in the market direction. So the main difference between change of character and change of character plus is the strength of reversal. We have a change of character plus is a stronger indicator because it forms two consecutive lower lows or higher highs before breaking the last high low or a lower high. So in simpler terms guys, you come to realize that we have two types of change of character in this. We have a change of character which has a plus, as when we have a normal change of character, which is actually this one over here. So there is a difference between this, because the change of character which has plus, it points a more solid change in trend, whereby we will have a lower low. And a lower low, remember, on downtrend, for us to really know it is a continuation to the downside, a lower low tends to be broken below. So in this case, you can see lower lows are not broken below, and so that's why we have a strong change of character where we had two consecutive lower lows formed, and it was indeed a reversal to the upside. Okay, so you can compare this strong change of character plus to the normal change of character, which is this one over here. So guys, let's talk about swing points. Swing points are important because they show that a trend is continuing for the long term. When these points are broken, they tend to trigger more noticeable market reaction compared to internal points. So guys, the main difference between internal and swing points is their role. Internal points tend to influence the market trend, while strong points suggest a strong continuation in the current trend. This is basically what I mean over here, where we have swing points, and the swing point suggests a strong continuation in the current trend. So in this case, we have a swing bearish point, these ones over here, you can see them. Then we have a bullish market point, which are actually even shown by the arrows over here. So that's the importance of swing points. You will see them both bearish and bullish. Okay, so guys, that's all about the swing point. So guys, let's talk about the volume order blocks. So volume order blocks are formed when a breakout structure takes place. In these cases, a bullish order block will be displayed with a green background, which is actually this one over here. This is what we mean by a volume order blocks over here. And so you're supposed to know the volume order blocks are formed when breakout structure has taken place. So in these cases, a bullish order block will be displayed with a green background, while a bearish one will be shown in a red background. These blocks reveal where institutional players initiate their positions. We can leverage this information for potential entry points or take profit levels, especially when enough supporting confluence align, increasing the likelihood of a successful trade. So volume serves as an additional metrics that confirm the strength of these order blocks. So a bullish order blocks accompanied by a bullish volume is more likely to be valid. That's what you're really supposed to know. Similarly, a bearish order block paired with considerable bearish volume is more likely to hold validity. On the other hand, order blocks with the low volume might lack the potency to drive the price movement significantly higher or lower when interacting with them. That's what you're supposed to know. So guys, you can see right here we have the bearish volume and the bullish volume combined with an order block. So that tells us how strong that order block is. So you can see more volume will indicate a more likely bounce in a pullback in an uptrend. That's what you're really supposed to know. Then a more bearish volume will indicate a more likely bounce in a pullback in a downtrend. Keep that in mind whenever you are using this indicator. And as well, here you can see we have a bearish order block, which is actually shown by a green background, and then we have a more bearish volume where price is likely to bounce back. And you can see for real the market came to the level over here and it really proceeded to the downside. The same is happening over here where we have a bullish order block shown by a green background over here, and we have a more bullish volume where it shows price will likely bounce back to the level. What is actually happening over here, and you can see it was indeed a push to the upside. That's how effective this guys is. You can see it is very effective, more detailed. So guys, let's talk about liquidity. So guys, when it comes to this indicator and you see liquidity wick, and the liquidity wicks in this indicator, they are actually shown by a yellow color. You will see this right on your chart. They are wicks, and remember wicks shows as weakness in the market. So guys, liquidity wicks involve the concept of liquidation through high volumes on wicks. We seek instances where the volume is above a moving average and the wick is greater than the body by a certain threshold. So the concept involves identify large volume candles with prominent wicks, which could indicate potential liquidation events or even potential price continuation. That's what you're really supposed to know whenever you see wicks. And so to know these wicks as well, you have to draw your support and resistance level, what your price is actually closing to. If it happens price will close below this, you're just going to execute your sell order. If price happens to close above your support level, you will consider taking your buy order. And that's what guys, this indicator shows as high and lows in the market, and high and lows from different time frame are displayed to highlight significant support or resistance levels, and these levels can play a crucial role in market, potentially leading to substantial price movement when breached. So guys, that's what you're really supposed to understand. Very much detailed price action concept indicator. I really love it. Remember, now we're just going to see whether it is working in real time, as well come up with a strategy we can use when trading this indicator. Okay, so guys, let me hope you've learned something from this video. Subscribe to this channel if you haven't liked this video as well. Continue working hard, because I really know one day your hard work will pay. So what do I say guys? Bye bye, see you in my next video.